Well, it's been a few days since I have done a video, and it's because I've been sick for the last few days. Had a crappy sore throat. Still got a stuffy nose now, but that's it. And if you ever hear someone talk with a stuffy nose, it's pretty damn annoying. But since so many people have been asking for a little update on what's going on in the world, I guess I'm gonna have to do one here. The GLD and the SLV, as we all know, are paper traded funds. They claim to have, these massive tons worth of gold and silver to back these funds. And if you are a holder of these funds, you're a shareholder, you can turn in the shares for, for the actual good. But a while back, several months ago, I did a video on the SLV and the GLD, and I basically read to you what the agreement is, or the, it's not the terms and conditions, what do they call this? What is it called? We'll just call it the terms and conditions. And the terms and conditions basically state that at any time, the GLD or the SLV can just immediately close down. You'll get your money back, kind of thing. You will not get any silver, you will not get any gold, and have a nice day. And there's an interesting story here that this guy put together. And I want to read this to you first. The GLD represents a triumph of bankster engineering in the gold market. While it is supposedly a convenient way for small business investors to hold gold, what is actually it is an extremely convenient tool for the banksters to dilute the investors' dollars flowing into the bullion market, and thus delay the rise of the price of gold and silver. And since you want a video so bad, you're gonna have to hear me blow my nose, because I am not editing all this out. That's a bonus, actually. That's a bonus for you tuning in to JSnip4. And I don't charge extra for that either. It can be thought of as the twin of the iShares Silver Trust, which is the SLV. Now, the GLD was a creation for the benefit of banksters, and specifically in this case, the bank HSBC, just like silver, or SLV, is for JP Morgan Chase, or namely JP Morgan, rather than the shareholders. Right? So it was a creation for the benefit of the bankers, in this case specifically HSBC, rather than shareholders, can be obtained by any close scrutiny of the prospectus. The prospectus. That's the thing, that's the word. Terms and conditions, right? Prospectus. And I read that a while back on a video to let everyone know why you shouldn't dare in your life go and get an SLV or GLD contract ever. Yeah, but you can turn it in and get the real thing. You only think you can. Back in July of 2010, I engaged in such an analysis, which I titled "The 7 Sins of GLD." Regular readers will recall that I made several startling discoveries upon such scrutiny. To begin with, there is no absolute requirement for the fund itself to invest any or all of the proceeds from the sale of units, which are basically shares, into the purchase of gold. What? Yeah. The official investment objective of the fund is merely to reflect the performance of the price of gold bullion. It is a bet on a bet. This is no different than a derivatives contract, which is a bet on some other asset. It's just a bet. So if you flood the market with these bets, claiming that each bet represents a real thing of gold or silver in this case, either way, only to find out you have massive manipulation due to the influx of all of this silver and gold. The problem is it's not silver and gold. It's pieces of paper that claim they're silver and gold. So what do you suppose the prices of gold and silver would be, or any commodity, any asset, anything, if the market was just flooded with these pieces of paper, basically titles to, you know, be like just houses, you know, 20 billion houses created. Well, wait a minute, there's only, you know, 7 billion people on the planet now. There's 20 billion houses. Oh, prices would completely collapse. Way too much housing, right? There's 3 houses, you know, roughly for every 1 person. This is crazy. Only to find out that when you turn in that title, we'll just say this little receipt's the title. I'd like to see one of my, you claim to have 20 billion houses out there. This one says I own this one over here on Main Street. Here's my piece of paperwork here. I'd like to have that house. Oh, sorry, we can't give that to you. What do you mean you can't give it to me? It says right here, and not only does it says you got 3 times the amount of houses that the entire public or people on the planet. Well, if you read the fine terms of the prospectus, we reserve the right to tell you to F off, basically, because it's just a piece of paper. Yeah, but this, it says right here, it says right here. Here, let me see a piece of paper, and then they rip it in half. There's your piece of paper. So in other words, there's an artificial price, which we already know this 1,000 times now, in gold and silver. Why? Because a piece of paper which claims that there are millions upon millions upon millions of ounces of both gold and silver that are out there, and these pieces of paper represent each one of those ounces, let's say, or a set amount of ounces per contract. And in the SLV, it's 1 ounce of silver equals 1 ounce, or equals 1 contract or share or whatever. So 1 ounce of silver is 1 share in the SLV. I believe for GLD gold, it's 1/10 of an ounce of gold equals that. So that would be, you know, at $1,900 gold, that would be, you know, $190 per share. Versus silver, right today, it would be $35 per share. So we have a massive influx of pieces of paper, all claiming that each individual one represents some fixed amount of physical gold and or silver, both of these cases, GLD and F and SLV, as well as the futures contracts that we always talk about on the COMEX and LBMA. That's a whole other thing. So when we talk about manipulation on the silver market, that's true. They are still trying to manipulate it down, both gold and silver, and they can do so by heavily creating these pieces of paper that in which there is no gold and silver. And as soon as enough people start buying up those pieces of paper, and you might find that, hey, there was only, you know, 20-to-1 ratio of paper to real thing, and the price is going back up. JP Morgan's selling off of their SLV or their short position. They're hammering us. Oh, the price didn't drop as much as they needed it to. Oh, well, that's okay. Let's go over here to our buddy, the CME group, or whoever the hell creates these things. Can you print up some more of those paper contracts? Sure. Can you give us a piece of paper that says you guys have, you know, 10 million ounces of silver right now? Yeah, sure, no problem. Go over to the computer, print up 10 million ounces of these contracts. There's another, but the example, 20. There's 20 contracts, 1 thing of silver. You with me? Price of silver is starting to go back up. JP Morgan's done all they could do to push it down, and it's still going up. All the contracts that are out there basically are bought up. We need to produce some more contracts. Let's go to the CME group. I think it might be the CME group that regulates that as far as who can print the contracts, create these futures contracts and whatnot. I'm not sure, but we'll pretend that is for this point of this. We need, we know we're leveraged 20-to-1, but we have the 20-to-1. It's not really 20-to-1. We have 21-to-1, but we know you guys leverage it, and we're all cool with that. We need to go double that. We need 40-to-1 now. Okay, just show us a piece of paper that says you have the physical silver. Alright, no problem, I'll be right back. JP Morgan, VP or whoever, can you give me a letterhead? I need to write up something real quick. Okay, scribble it on there, print it on a computer, whatever. Here you go. We have the silver in our vault. We are the custodian of the SLV contracts, just like HSBC is the custodian for the GLD contract. We have the silver. Here's your paperwork. Oh, CME Group looks it over. Looks good. And you guys have a great credit rating. We don't need to check this out. Okay. 20 now we're 40-to-1 contracts out there. Now there's, you know, double the amount of paper contracts have just been created. But the same amount of silver is still out there. Yet, because of best friends, I heard it from a friend who heard it from a friend who heard it from another, you've been messing around. Who heard it from another, you had some silver, and you just wrote it on a letterhead. It said you did. Good enough for us. Print the contracts. So they're diluting the hell out of the gold and silver markets. And those of us who sit back here and get pissed off, when am I going to see that $50 silver again? When's it going to go blow past it? I heard $75 and $100 silver's next, man. I'm getting tired of waiting. The longer they do this, and the more these pieces of paper they keep printing, the more inevitable it is. It's already inevitable. Mathematical certainty that gold and silver will skyrocket when it finally comes out, when people with all these paper contracts start demanding some type of delivery, and either the SLV and GLD stand up and say, hey, we're not doing this, we dissolve this company, corporation, whatever, immediately, effective right now. Here's your money, your cash money back, have a nice day. Done. Something of that nature is what it's going to take. What would also help that happen is the physical depletion of real gold and silver out of the marketplace. Real physical gold and silver, which everyone is working on right now. Just a matter of time. So the more they keep manipulating it, the more futures contracts and SLV contracts that they come out with, they just keep pretending they've got all this great amount of silver and gold when they don't even have a fraction of a fraction of a fraction of what they claim. Yet they're allowed to put on a piece of paper that they do. Okay, then we can put these contracts out there. So there's all these millions upon millions upon millions of people who own a piece of paper contract that think that they actually own something that they don't own. But for the most part, most people, well, they didn't really care. I'm in it. Again, I'm the derivatives guy. That's what these traders do. I'm only betting on a bet. I'm betting on another asset. I'm betting on the price of gold and silver. That's all this contract represents. Even though it says I can turn it in for a real thing, I'm just betting on a contract. This contract is betting on the real thing going up. But the real thing, this contract is good for it, of course. There's, it says I own 5,000 ounces here. One full-size futures contract. It's there. Only to find out it's not there. So, I'm about to get the other box of tissues out on standby. So reading on with this, I got a little sidetracked there. I got to give you the whole scoop of things sometimes. It says, to begin with, there is absolutely no requirement for the fund, the SLV or the GLD in this case too. Both are the same rules. There's no requirement that they even invest any or all of the money that we invest to them, and they actually go invest it in the gold or silver. It's in the prospectus. Terms and conditions. The official investment objective of the fund is to merely reflect the performance of the price of gold or silver bullion. In other words, rather than being structured as a genuine gold trust, just like Eric Sprott's, the PSLV and the PGLD, I believe, those are really backed by the real amount of gold and silver he claims. There's a big difference. And Canada, the Mint, I think, actually just came out recently to do the same thing. Imagine that. In other words, rather than being structured as a genuine gold trust, it is actually a self-described index fund required to only track the price of gold, rather than being required to fully invest in the gold or silver bullion. Indeed, the strongest statement which the fund sponsor was prepared to make in terms of a warranty to the shareholders was that it, quote, believes that for many investors the shares represent a cost-effective investment in gold. However, the prospectus expressly defines the warranty as a, quote, forward-looking statement. It then later adds that with any or every forward-looking statement that, quote, they are only predictions, actual events or results may differ materially. What this boils down to is that the sponsor offers unit holders nothing more than its belief that the fund will maintain its holdings in gold bullion, while warning investors that they cannot rely upon that belief. The glaring lack of any firm guarantee for shareholders becomes increasingly significant when we examine other clauses within the prospectus. To the credit of the sponsor and custodian, again, the custodian is the one who claims to hold all of the physical, which in this case is HSBC, they do warn investors how little protection or guarantees they have in their investment in the section of, quote, risk factors. Here the sponsor does make one firm guarantee, that the fund will continue to become more and more diluted over time. Specifically, while the original intention of the fund was for each unit to represent 1/10 ounce of gold, the sponsor guarantees to investors that the gap between that original 1/10 ounce of gold and what unit holders or shareholders actually own will continue to increase over time. Immediately we see one enormous difference between units of GLD and real bullion. Real gold does not evaporate over time. Of course, that difference is rather trivial compared to a much more glaring difference, and that is the counterparty risk to which GLD unit holders expose themselves to. Hold an ounce of gold in a safety deposit box, a home safe, or bury it in some secret hiding place, and no matter what our lemming leaders do to the global economy, that 1 ounce of gold will continue to be 1 ounce of gold. In comparison, GLD unit holders have maximum counterparty risk. Specifically, not only do the sponsor and custodian claim complete immunity from any losses caused to unit holders, shareholders, by, quote, acts of God, war, or terrorism, but they also seek to indemnify themselves from negligence, fraud, and willful default. Simply, under no circumstances could the supposed custodian for the unit holders, GLD shareholders, ever be required to deliver the gold it claims to be holding for those unit holders in trust. Even if HSBC's vault was overflowing with gold, it could simply choose not to deliver the unit holders, and all the unit holders would ever be able to recover is their paper dollars. Paper. That's it. The prospectus further warns that the gold held in trust, which is inside HSBC's secured vault supposedly, could be, quote, lost, stolen, or damaged. It's in there. I read this to you several months ago, by the way. The same things he's talking about here. On top of that, the prospectus adds that the sponsor can block, quote, redemptions of, in other words, here's my paper, give me the gold. Prospectus adds that the sponsors can block redemptions indefinitely anytime it decrees there to be an emergency. Quite obviously, the gold held by the custodian belongs, in every meaningful sense, to the sponsor and custodian, not the shareholders. Indeed, to refer to this structure as a trust is simply perverse. The one assurance which unit holders could rely upon, that the rate of dilution of the fund would be capped at a fixed maximum, is about to expire. D-Day, or Dilution Day, has finally arrived for GLD. And by the way, I don't know if it's the same for SLV. I haven't checked. It won't matter one way or the other. Lest investors think this merely some administrative triviality, the fund's creators deliberately chose to be extremely melodramatic in this respect. Clearly, on the 11th day of the 11th month of the 11th year, 2011, 11/11/11. Boy, isn't that a special date we keep hearing about? That self-imposed cap on the rate of dilution of the fund expires. From this point onward, the fund will be diluted by any/all expenses incurred while administering the fund. This becomes especially important at this point in time, given one of the specific risks of dilution, which the fund warns of in its prospectus. Wonder what this thing has to say. First, bonus number 3 for you guys. And here's what it warns in the prospectus. Quote, the trust may be required to terminate and liquidate at any time which is disadvantageous. The trust may be required to terminate and liquidate at a time which is disadvantageous to shareholders. So what does that mean? They may choose and be required possibly to terminate and liquidate the GLD or SLV at a time which is not good for the shareholders, disadvantageous to shareholders. You mean like if they crash and smash gold and silver, again, they may not be done with it like I said. They crash and smash gold and silver way down. Incredibly down to levels people never thought imaginable. Again, it'll be short-lived. And then comes the moonshot in price. Because when this happens and this gets if that's how this is gonna go down, and they realize, hey, the fund is collapsing, we lost a ton of money, we're liquidating the gold that we claim to have. And by the way, it's a disadvantageous time right now, because we know, you know, we had $1,900 gold the other day. It's now 16, 17, back up to 17 something. It's almost 1,800 again. And all of a sudden, boom, something happens. Oh my God, gold's down to $900, $1,000. Just some really low number from where it's gone, right? Where it was at. Now we as HSBC, the custodian, and this the other party here, we choose to terminate and liquidate this fund immediately. We are selling our gold, what gold we had, and the SLV would do the same thing probably. SLV, GLD, the gold and silver we claim to have had, we've just sold off to, oh, I don't know, ourselves. HSBC will sell it to themselves, the bank, and JP Morgan, custodian of SLV, will also sell the SLV silver that's supposed to be, you know, in the warehouse, so to speak, in the vaults, to themselves. And then tell everyone, hey, wait, whoa. Read the terms and conditions, right? The prospectus. Every one of you millions of people, however many of you got into SLV and GLD, did you not read our prospectus? Well, no, I didn't read the prospectus. I went to a broker and he told me all about it. It was the greatest thing. You can invest in it with a 401k and this and that. They didn't tell me that. Well, he probably gave you something. Open the paperwork up. Well, I didn't read that. Well, it's right there though. Go read the damn thing. Yeah, but I didn't know. Sorry about your luck. Step into my office. Why? Because you're freaking fired. That's why. That's what JP Morgan's going to tell these people. Now, you know they'll be pissed off and later on will want to kill somebody. But that's so that you and I don't have to do that. I'm informing you now to get your butt out of SLV or GLD as soon as possible. I don't care. Again, I don't care if you say, well, yeah, but I got a 401k and I'm stuck in it. You better call whoever you got to call and see if you can switch that to the PSLV, which is Sprott's silver, or the PGLD, I think it's called, for his gold fund. That way, if they smash the prices of gold and silver, temporarily, of course, to pull this off, you can't have Eric Sprott. Eric Sprott's not going to come out and say, well, my prospectus says that I can just liquidate all the accounts and sell off the gold and silver and tough luck. Although, I haven't read his prospectus, to tell you the truth. I'm quite certain it's not like JP Morgan and HSBC's. I'm pretty sure of that. And even better than that, do whatever the hell you have to do to get your money out, even if you have to get a loan from your own 401k and pay it back, which goes back to you, by the way. Even the interest goes back to you. Take it out and buy your physical silver and gold ASAP. If they crash these markets down, specifically so that all of a sudden, the GLD is now no longer, it's null and void. The SLV, null and void. They don't have to show anybody that they ever had the amount of gold and silver they claimed, because by law, we you know, emergency alert, gold and silver is down too low, we're liquidating the fund, have a nice day. And everyone, you are basically forced out of the position, even though you may know in the back of your mind, oh, that's okay if gold goes down to $1,100 and silver goes down to 12, 13 bucks. That's all right, I know it's going to go a moonshot afterwards, I'll just sit back and wait. No, you won't. They're going to liquidate your account in the SLV, in the GLD. They will liquidate it, destroy the fund will go away. Here's your money back at today's current prices, which means you lost a buttload of money. Sorry. Have a nice day. Then you take the scraps and change you get back and finally come to the conclusion, damn it, I should have got the real physical gold and silver. Meanwhile, The moonshot in the price of gold and silver is on the launch pad, getting ready to take off. Now that JP Morgan will have all that silver in its vault for keeps, and HSBC will have all of the gold in its vaults for keeps, and then they can sit back and profit amazingly when of course all of a sudden there's these real shortages that come out in gold and silver. All these numbers that they claim to have didn't have it, but that's okay, because we now have the real thing in our vault, says JP Morgan and HSBC, and they'll be selling it to people who want to buy it, of course, the real thing, except the prices are going to be astronomical for gold and silver when that takes place. So that's why I am telling you this. And here's more ammunition for what I've just talked about. And this guy said, this is another thing, and we thought the JP Morgan paper silver manipulation was bad with our markets here. Wait till this thing goes off in China with the paper silver naked shorts that are selling there. Again, a naked short is nothing more than basically short. Naked is all that really means, from what I understand, is that you're claiming to have something, a commodity, and really you don't have it, but there's a piece of paper that says you do. And not only that, there's tons and tons and tons, just like in our COMEX, our local futures contract here in America. There's, 100 paper contracts to one real thing of physical gold or silver or whatever the numbers end up being, somewhere around there. That's like a naked position. They never had the goods. They should have never had contracts put on the goods because they didn't have the goods to begin with. But that's okay. In this world, in this time period, we can just do whatever the hell we want in the banker class and cause weapons of financial mass destruction that are fixing to go off. That's okay. So he says, wait till this thing goes off in China with the paper silver naked shorts selling there. Look at the numbers. Now we have 2 time bombs since they convinced people to accept paper silver in China now. Wonder who the Chinese version of JP Morgan is selling naked shorts over there. I love it. It's going to be a worldwide panic for the physical silver and gold. Chinese silver investment going parabolic. When 1.3 billion people start investing in something, you might want to pay attention. Chinese investment, oh yeah, Bozo Beast, that includes you too. You might want to start paying attention to words of wisdom. Chinese investment in silver has exploded. Hold on. Bozo Beast, is that you? Yeah, I just read the first sentence. Chinese investment in silver has exploded since last year. That can't happen according to you. No one wants silver. The price is only going to keep going down, not up. What? You still there? Oh, he hung up. Yeah. Chinese investment in silver has exploded since last year, with the trading volume going up exponentially. The China Daily reported today that the trading volume of silver forwards on the Shanghai Gold Exchange, SGE, China's only exchange for precious metals, surged 751%, 751% on a year-on-year basis since 2010 to 2011. Let me read that to you again. You probably thought you heard something else. The China Daily reported today that the trading volume of silver forwards on the Shanghai Gold Exchange, China's only exchange for precious metal, surged 751% year-on-year in 2010. Meanwhile, the volume in September of this year was more than 6 times that of the same period in 2010. Yellow Bozo Beast, listen, you there? Yeah, no, I'm not making it up. No, this is real. This is real news. I'm not just trying to bust your cojones here. No, this is real. Yeah. What's that? You're worried about $50 silver by the end of 2012 or 2011? We had a bet that I said it would go to $50 before we hit January 1st, 2012. I know, but there's a lot of downward pressure from the bankster class, and I may lose that bet. You're right, we may not see $50 by January 1st, 2011. But are you listening to the video I'm doing right now? Yeah, okay, I'm gonna hang up now so you can listen in. All right, bye. Have a nice day, Bozo Beast. Chinese commercial banks are now selling silver to investors in the hundreds of tons. One example is the Industrial and Commercial Bank of China, Ltd., China's biggest lender, which launched paper silver trading for individual investors in August of last year. The other large Chinese banks have also introduced silver trading. The trading volume of ICBC's paper silver products alone reached 300 tons in the first half of 2011, almost 4 times the figure for the whole entire year of 2010. Now, I'm not going to call Bozo Beast back. Nah, I don't need to. That's right. One Chinese bank alone sold 300 tons, or the equivalent of 10.5 million ounces of silver, in only 6 months' time. And that's also just China. In only their first year of trading, ICBC Bank alone will sell over 20 million ounces of silver, which alone would represent over 2% of the total amount of silver mined on Earth for the entire year. Kind of sounds like something shenanigans that are going on here, doesn't it? Let me continue reading. The key factor to pay attention to is that most of these silver purchases are forward contracts and not the actual physical silver. Oh, there it is. What happens when Chinese investors demand physical silver instead of paper silver? Modern day commodity markets are characterized by a continuing divergence between the paper and the real physical markets. The Chinese silver market is no different. Most commodities trading takes place between parties that have no physical supply of the material to begin with. You gotta love these futures contracts. This is, again, massive finance. What is it? Weapons of mass financial destruction. Max Kaiser says it perfectly. In the silver, well, the only problem is when that weapon of mass financial destruction goes off, those of us holding the real thing, it's a fantastic explosion. In the silver market, the distortion between the physical and paper markets is extreme. Every day in the global markets, $50 billion of silver can be sold daily by parties that actually own no silver whatsoever. Can you imagine selling stuff that you don't have? Can you imagine selling things that you don't have? It's like a pyramid scheme, Ponzi scheme kind of thing, right? At least with a Ponzi scheme, you take in money and then tell everyone else you got, the group, we got a bunch more money, and so everyone's shares went up. Really, you just used the money that came in from new investors, but didn't tell them yet. Pyramid scheme, on the other hand, you claim to have certain things, and this guy pays that guy, and once he gets it, then he goes on to the next guy. Meanwhile, there's several people in line who think they're getting it, only to find out they're sharing the one same thing on the way up the ladder. This is just incredible. The global silver market will trade 1 billion ounces daily in global markets, which is more than the entire amount of silver mined each year, which is close to 900 million ounces. Demand for precious metals in China is skyrocketing. High inflation and a lack of investment options are the main culprits. With the new housing regulations bringing housing investment to a standstill, investors are looking for new ways to invest cash. The housing market looks to go down, and the stock market is widely viewed as corrupt and risky. Gold and silver are becoming increasingly popular over in China. China's net imports of silver hit a record high in 2010, with the volume quadrupling to a total import amount of 3,500 tons. This is a major shift, as China was previously a net exporter. Now they're a massive importer of silver. In China, silver has served historically as the main medium of exchange there. It was an official currency from as far back as 206 BC through 220 AD. Silver ingots were used to hoard wealth, and silver taels were produced by the government to function as a currency, or to back a paper currency. Neither of which is happening anywhere in the world today. The Chinese word for bank is literally silver house. I think I have one final bonus for you. Chinese silver is largely a paper market today. Chinese banks are selling paper silver in massive amounts, which will no doubt continue to double or triple year after year. These paper silver contracts are redeemable in silver bars at the banks, yet the banks don't have the silver. Chinese investors are often fickle and enjoy hard assets. What kind of short squeeze will develop when Chinese banks are forced to go out into the open market and buy physical silver to support Chinese investors when they switch from paper silver to physical silver? That is the question. And Bix Weir has something to say too. Man. So as we sit here pondering the myriad of global monetary implosions happening as we speak, one thing always seems to come back to the forefront. What happens to the price of silver if JP Morgan is caught up in this mayhem and goes down? Zero Hedge just posted a very plausible scenario where the credit default swaps that are imploding in Europe, which again, MF Global, which is a US company, is heavily invested in that area and is going to take a beating. So what is the scenario where the credit default swaps that are imploding in Europe could easily destroy the top 5 US banks that trade 97% of these toxic derivatives? He links to it. Clearly, JP Morgan is in the crosshairs of the current derivative implosions, but what does that mean for silver? A lot. I believe that JP Morgan is the only large seller of silver left on the COMEX and LBMA. They are also in charge of the silver short hot potato, as we all know, that has destroyed many companies that tried to control the silver bull, including Bear Stearns, AIG, Drexel Burnham, and more going back decades. No one in their right mind would take the short side of silver unless they had to defend the system, which is precisely what JP Morgan is trying to do. That system being US dollar hegemony, if you will. US dollar for everything. Gaddafi, you want to back your new currency by gold? No, we got to get rid of you. Saddam Hussein, you wanted to do the same thing? No, we got to get rid of you too. Isn't that amazing? What are the chances of all these terrorists? North Korea, craziest mofo on the face of the earth. Why aren't we over there? Why isn't the UN over there? No fly zones. What's going on? Kim Jong-il, we've got to protect the people of warmonger McCain. If the UN vetoed us, we may have to go in by ourselves in Syria and take care of business with Assad. We got to protect those citizens. What about the citizens in North Korea that are under the worst dictatorship on the face of the earth? Why aren't we over there? McCain? Bush? Obama? Anybody? No comment, huh? Oh, okay. Well, that's right, there's no gold there for the most part. There's no silver, and there certainly isn't really any oil. Oh, okay. Now I understand. So while JP Morgan fights to keep the price of silver down with massive derivative shorts, their multi-trillion-dollar credit default swap book is blowing up. JP Morgan is on the edge of the cliff and will drag everyone to the depths of the abyss as they go down. Remember, if JP Morgan is destroyed, then there will be no sellers left in the silver pits. Not one seller, not one at $50, $100, $500, or $1,000. None. Of course, the global market for silver will shut down before the exchanges are exposed as the corrupt entities that they are. Watch for claims of force majeure to be used in their defense when they have to shut down. Very soon we will know the real fair market value of silver and you can bet it will start with 4 digits. I don't know if I'm going to go that far. 3 digits? Sure. The end game is upon us, so stock up on all the physical silver you can and trade in every single electronic or paper for the real thing. Man, might be a day or two before I do any more videos. It's hard to sit here and talk and blow my nose and everything as it is anyways. But I had to do a little update. Wanted to share that with you and let you know, again, it doesn't matter what happens in the marketplace right now with gold and silver. It doesn't matter if they crash it, if they try to smash it, or if while they try to pull something off, like he says, COMEX shut down, exchanges shut down due to emergency, blah blah blah, force majeure clause. What is the force majeure clause? What is force majeure? I've never heard of that. Well, the force majeure clause is in most major contracts, whether it's international contracts we have with another country or financial institutions. And the force majeure clause is pretty simple, and it kind of states what they said in the GLD prospectus, where, you know, acts of God, acts of terrorism, and a lot of times other you know, major things. And of course other isn't defined, or, you know, just emergencies generally speaking, other major emergencies. And they'll claim that some emergency happened. Well, and that emergency was, well, all the MF whatever global and this guy, and then Greece defaulted, and oh my god, Italy's going down, France is going down. There's our emergency, everything stops, null and void, force majeure clause enacted, have a nice day. You can get out of any contract you owe on, you can get out of any contract anyway, as long as there's a force majeure clause in the contract. And yes, I do believe sooner or later, and it doesn't necessarily mean just in silver and gold markets, but other things that are happening out there, other agreements that are out there, country to country, trade agreements, all kinds of stuff. Force majeure declared, have a nice day. It could happen. And wouldn't it be a real easy way to default in the US if something like that guy Jonathan Kleck said happens? You know, the freaking Hoover Dam breaks and there's just, you know, hundreds of billions of dollars, whatever it is, just damage, powers is shut down in areas, just incredible devastation, etc. Obama, national emergency, force majeure clause, have a nice day. China, have a nice day. Bondholders, have a nice day. Everybody else. I don't think that would happen at that scale, mainly because I don't think they'd want to have people coming here bombing us, you know, starting a war in that respect. And of course the finger would be pointed at us. So who knows if we'll see at that high level. But anyways, that's all I want to share with you. Gotta run. Have a nice day.